Morning traders, how you doing? It's Coach Ernie here, and this is the 0DTE morning market analysis. And man, volatility is screaming and the market's on edge. But why? Everyone's looking for answers. That's because rates are crushing everything. Now, welcome to the 0DTE morning analysis. That'll be the focus of today. We'll be talking a little bit about rates, why we're getting those intraday swings. Everyone, like I said, everyone's looking for answers. They say, man, my trade was here. And then the market went there, and it looked great, and then it turned around, and then it turned around again. This is actually a good thing for us 0DTE traders, because when we have volatility like this, we have edge case strategies that we can employ, like the Batman, for instance, which is particularly designed for these intraday swings, and others. And that's actually going to be a focus for tomorrow, too. But today's focus is definitely on interest rates and how that is causing, in my view, these intraday swings. But first, we go to the charts and do our normal morning market analysis. All right, that's not the charts. That's not the charts, Ernie. Hold on. This is the charts. That's the wrong chart. Man, good start. That's volatility in action. All right, so first of all, we look at the VIX. We're looking to gauge the width of our flies, how much exposure we want to this volatility. And of course, as you've heard before, when there's more volatility, 0DTE traders, particularly the way we trade with out-of-the-money butterflies, when there's more volatility, we love it. We run into the fire. All right? And it looks like, and I talked about this a long time ago, that I felt like, man, 2025 is going to be a great year for 0DTE traders. Volatility is on the rise. Premiums are bloated, and our opportunities are really up there. So, in any event, right now, the VIX is sitting at just under 24, at 23 and a half. We go up and look at our guide. That means that we're between 25 and 35 wide, maybe inching up to maybe 30 to 40 wide. Now, next thing to do is look at our big-ass fly. That's going to be kind of our fine-tuning gauge to see which end of that range that we should be on, and that will be based on the price of that big-ass fly. Of course, a lower price means that volatility is higher, or particularly markets are pricing options in such a way that they're much more expensive, and that actually makes our big-ass fly or our out-of-the-money butterflies cheaper. And so that has a tendency to kind of like rise the whole fly up, making the debit less. So we have less risk, more profit potential, lower gamma or sensitivity to price, all good. So anyways, let's go. Instead of just talking about it, let's go to take a swim and take a look at that big-ass fly, see where it is. And of course, again, only $11.20 for that big-ass fly. That is super unusual. We have all this potential for today. Yesterday, I took one of these trades, worked out well. I think I made 8.5 points. So that would be about $850 per position. So it's a at-the-money 50-wide fly, put on early morning before the economic reports come out. Like today, we have unemployment. Yesterday, we had a horrific ADP, and I'll be talking about that in a bit. But in any event, let's go back to the VIX and see what that gives us. Basically, it's saying that we need to favor the wide end of our range. So we're looking at 30, 35 wide. See, 10 is way over, 11, way over here. All right. Next step is to take a look at our bearish, our directional bias. I guess I gave it away, huh? It's definitely bearish. In fact, the last 10 days, we've been bearish or ended super down 8 of those 10 days. And today looks like it might be 8 out of 11. Hold on, got a cough. Excuse me. I know, I didn't have the cough button ready. Next step is to look at the market levels, the structural levels. Need a drink there. I got all excited. Sorry. And this is where we look at the volume profile and map out the structural levels where we see support and resistance. The red and green lines are outlining nodes. The red line is the top of a node. Green line is the bottom of a node. So you can see currently we're sitting right at the top of a volume node. And because we're looking for a downward bias, we're looking for moves like this. Come up into one of these structural levels and then move down. When we get one of these events, we'll then put an out-of-the-money butterfly like in the direction that we think price is going, like down here. That's how it works. So this is yesterday showing people, how I got in and out of the trade, why I got in and out of the big ass fly yesterday. So I used my profit management. I was up to 1,050. Okay, I guess I made $7.25. All right. So there's our structural levels. The big ones today are 57.88, 58.05, and looks like 58.22 are our most impactful levels this morning. We're going to wait for one of those events to happen. So why don't we talk a little bit about what the focus is today, and that lead-in focus is mortgage rates. Mortgage rates are now spiking again. Now, uncertainties everywhere. So let's take a look at it a little bit closer. Yesterday's 30-year mortgage rate hit 6.19%. Now that's down 57 basis points from a month ago, but it's way up from September's 6.0% low. And that's a 92 basis point climb since the fall. I mean, come on, refi rates. They're 6.7% as of Monday and still stinging from the pandemic lows near 3%. Why does this matter? Now, higher rates are slamming affordability. I mean, housing stocks like D.R. Horton, they could flip 3 to 5% intraday. These sensitivities are what causing these intraday swings. So that's really the problem. And yesterday's ADP jobs data, as I said, came in at 77,000. Man, what were they looking at? They were looking at something like, oh man, I don't have the big head. Let me just see what Forex Factory is saying. They were expecting 141,000. They got 77K. And then this morning at 8:30, we have unemployment claims. And so I would imagine that people are really focused on that as well. So that combined with interest rates are all causing this intraday swings. So you got to look at movers like JP Morgan. I mean, they might surge 2% if yields climb. Things like Tesla, for instance, man, a 2 to 3% drop in rates could choke any kind of growth stock or perceived growth. I think Tesla's on a different plane. It's a hard one to look at to analyze the overall market. It's got its own mind, and either people are buyers or sellers at any particular time. But in any event, that is what is happening. Rates are crushing markets. But hey, where's 0 DTE? Is that bad for us? As long as it keeps the volatility up there, we don't care because we run into the fire. All right, so there you go. There's this morning's report. Just to recap, we're 30 to 35 wide on our flies. Where directional bias is down. We're looking for those big intraday swings, so we might switch that bias if we get a big reversal during the day. And we showed you the structural levels where that might happen. So we're going to be watching that for a market event. We'll be looking for divergences as price interacts with one of those events, and then we'll place our flies. But the big ass fly is definitely on for this morning, and also the Batman. So you might want to consider the Batman. If you look at my VIX guide here for strategies, let me go to that again. you'll see the Batman is coming in play. So 1 out of every 3 trades, we should be considering the Batman. Today would definitely be one of those days. All right, there you go. That's it. That's it for today's morning analysis. Thank you very much. Happy trading. Coach Ernie out.